Okay, hi there, guys. How are you, Peter? How are you, Bobby? Just let me know if you can hear me. I want to get the ball rolling. Do you want to change of events? Turn of the tide. A few swings and roundabouts out there. All clear, fantastic. All right. Welcome, guys. Welcome to Trade Setup and live stream. What are we now? The 3rd of December. So it could be the start of that Christmas rally. I think people are a bit more cheerful today, unless, of course, you're getting stopped out of a few, which is a bit of an unfortunate move today, which we know we did get stopped out of one earlier on today when the spike low was pretty much straight on the open and it's just been hanging around there. Yeah, it's a bit of a turn of the tide, like we said today. I think the market was down on Friday, about 90 something points, and then we turned around and we rallied about 90 points, so gained it all back again today, which didn't expect it to go down that hard on Friday. I think we were mentioning that on Thursday that it could be obviously what was happening with China and the US. It could have gone either way. Didn't expect it, like I said, to get that beating on a Friday prior to that when the market actually, the US had been up and the US was up on Friday night as well. Uh, then we turn around today and make it all back. And that's what I think. We mentioned it quite a few times. We're a very timid market on the ASX, whereas a lot of the other markets, they can pick a direction a lot easier. We will happily fall off a cliff with everyone else, but struggle to rally. Um, but yeah, we'll look back to square one from where we closed on Thursday, pretty much. A lot of the market, the banks have, I think they've actually opened high and they were sort of sold down. I haven't checked them lately, but we'll take a look at those. I think there's a couple of things I want to take a look at. Also, obviously, with what's happening with China and the US now, if it plays out okay, or it may just get a bit of a lift because this is sort of the first, first positive news. Whether or not, like someone was mentioning, it's a bit more kicking a can down the road. We've got, was it 90 days until something's done? So it could be that they're going to be banging around back and forth for the next 90 days or so, trying to work out, and it just goes back into negotiation. But at least, they've agreed within. I mean, anything could change, obviously. But I think the US has agreed no more tariffs. They're going to leave it at 10% for the next 90 days, opposed to 25, I think it was, lifting it. So yeah, um, it could mean that we get that Christmas rally we're just waiting for, or the whole market was sort of holding off on that, just waiting to see what happened over the weekend. And they've agreed to, I mean, China have agreed to do a few things without giving up too much at all. Really, I can't remember what I read somewhere, but yeah, they're agreeing to buy some more products, but they just haven't agreed on the amount. They just say it should be significant. I think this is coming out of the US, probably US talking it up a bit, saying they're winning the battle with China. But basically, not much has changed. There's not much agreement apart from the 90 days. But it's given our market a big lift. We can see now we're up 85.9 points. We're just up 91 points something just a minute ago. So we're holding up that, I think as we mentioned, 5650 to 5700. We're holding up above that zone on the ASX. So the more we sort of reject that, the more likely we're going to get a bit of a bounce. So um, I've got a couple of stocks I want to go through. It's more of stocks just to be wary. I mean, they look great on the daily, but not so great on the weekly. So we'll have a look at some of those. There's probably going to be a few floating around like that where they could look ready to set up and they're showing all some really good signs. Just be wary of the weekly charts as well. It could drag them down. And if you get any sort of negative news between China and the US in the next, coming up into Christmas, it could get knocked down fairly quickly because nothing's been worked out just yet. Also, want to take a look at copper. I think it's worth having a look at copper, potentially copper products, copper stocks, not copper products, copper stocks, because copper's been really choppy. It has been sold down hard for a while now, and seem to have just been choppy over the news between China and US over the trade war. It's been up and down like a bit of a yo-yo, down, back up again. Any sort of so there's all the news that comes out. If it's positive, it pops up. If it's negative, it'll straight back down again. And it's actually gapped up today, along with oil gapped up. on the open this morning on the futures market. The US is gapped up. I don't know what the US futures are gapped up, so it's all fairly bullish. Which oil that's given you can see well a lot of the oil stocks have popped up today. But I just want to go over copper because I think the last 6 months or so, the physical supply has been coming down. So that's what's held in, I think, the LME, London Metal Exchange. The physical supply of copper has been coming down, which should be really bullish. But obviously, with all the tariffs and the trade war going on between China sucking the most into their economy, most supply, that hasn't done too much now. If it comes out the other end, we may see a bit of a bullish run on copper and copper-related stocks. So if anyone's got any copper-related stocks that they've got their eye on, just let me know and we'll take a look at them. I've got a few. I think I've got a list from a while ago. Just have a look at those. Actually, I've just got it there. So yeah, a few things to do today. Let's just look at where the overall market. So you can see this is the XJO. You can see this level we've been keeping our eye on for quite a while now. We just come plowing into it, bounced quite hard, touched on that 59.50, straight back down, but rejected it a couple of days ago. What was that, Thursday? Rejected that. We're down on Friday. I'm on the weekly, sorry. What am I talking about? So we rejected that, was it 21st? And bounced back up. Then we got that big sell-off on Friday, and we're straight back up again to where we started. So where was it? It opened at 57.58, and we've actually traded through that today, 57.61 and a half. So pretty much any losses from Friday have been made straight back again. Be interesting to see if we can hold up through this zone and we start creeping back up. I think there's still a bit of work to do, obviously, but this could be just that. Everyone's sort of expecting the Christmas rally. This could be the fuel to kick it up. I think anything you'd be looking at, just bear in mind that things could change pretty quickly. And if you're going to jump into a couple of stocks, I think there's a couple where I'm going to be happy to look at, and it's purely that limited time frame too, and with tighter risk on them. So I think that's the way you should attack it, because nothing's, like I said, nothing's been sorted out just yet. There could be some argy-bargy back and forth, but further negotiations between the US and China, and they don't come to any sort of agreement. And then obviously Trump will start sprouting, raising tariffs, and he may not wait the 90 days. He may just go, look, that's it, we're going to put them back on, talk it up a bit more, and that's going to knock the market back down again, you would expect. So I think it's still be a bit more tentative going forward. But I think could be the good news to start lifting this market off that 5,700 mark or 5,750. Let's look at the US. Let's look at the futures actually. Where am I? This is a mini. I'll go back to the daily. So we spoke up at this level a while ago, holding up at that support zone. If everyone can see that, 24,230. So this is the Dow futures. Anyone watches that? The $5 futures. Don't know why I said that, but anyway. So it's holding up, and it's holding up as this long-term support. If we just go back down to the weekly, and you can see this support zone has been fairly clear, holding quite consistently. The market's still technically on the weekly is going up, and it's held this higher low potentially on that weekly. And obviously we could just chop sideways in the Dow, bounce around, but that's your top 30 stocks, which have been susceptible to tariff talk, trade war talk. They've been bouncing around quite a bit, and you can see that the way it's reacted, it's obviously got sold back down. This was a few months ago. When was that? Sorry, a month ago, last month, end of last month, bounced straight back down, and it's been rejected. So it's rejected that same zone. That's essentially that minor double bottom. I think to get any confidence, we need to contract a bit like what we saw previously, contract in price and then start to bounce. Let's just go back to that daily. I mean, this to buy into where we are at the moment, I personally find it very hard. I wouldn't just on the US anyway, but I mean, they can do anything they want, to be honest. I don't mind if it pops up here and we get a bit of this push up through that. If we get through that anchor level at 26,264, let's just draw that up. Ideally, what I would look for is I think if we do pop up through there, then I'd look for this big sort of a pop down. It may just scare a few people. It might be some negative news that tips it over, but then start to look for that contraction and that lifting. If you can get that, which is pretty much the same as what we did here, it started getting choppy before we really lifted right up to all-time highs or made some new highs. If the Dow can do that, then start holding some nice higher lows and working its way up a bit more contained. That's what you'd ideally want to see. But I think this move up here is not really sustainable. We're not going to get straight up through new highs. I wouldn't expect anyway. Bang up through new highs and just keep going from here. So it's got to clean out a few of these buys in here, chop around a bit, start holding some serious higher lows, and be a bit more contained, a bit more clean with the price action. Now, let's take a look at the S&P. So the S&P it's looking a bit different. If you just go back through that weekly chart, look, if we just move that along the lows, look, it could be, may or may not, if that's what's holding here, if it's the same as a Dow and we're getting that same type of price action and we're holding through this high zone just in here, which is about 2620, say, then again, that's looking like it could just continue this trend up, which is going to, for the bears, it's going to squeeze a few people out because they're not really expecting this. They've been very bearish for a while now. But I wouldn't be happy just to buy in here if I was obviously trading in the US. I want to see it chop around and hold a higher low somewhere, potentially around 27.29 or 27.30. That sort of zone, which is a big sort of a bit of a pullback from where we are at the moment, nearly 2,800, I think, on the futures. But I think, like I said, that move down is not really sustainable, especially when you got to remember too, if they sort out the tariffs, there's going to be a bit more global growth. I guess at the moment it's probably been contained a bit, maybe by tariffs, maybe by just a few different things. And they're looking at not raising rates potentially. I think they were talking up 3 times next year. I think there's a rate rise coming. It's pretty much locked away for this year, and they were talking one more in this month in the US, 3 more next year, which I think the US dollar's been adjusting for um, the narrative that they're coming back to parity. They don't really need to contain anymore. It's pretty much within their range. Inflation's within their range. Growth has eased. Global growth has eased. Now, if and that I don't know if they're going to look at maybe one more rate rise next year instead of 3. But if the market starts factoring another one, that probably could cap on the upside, because then you're talking higher interest rates, higher cost of debt, all that sort of thing come back on the cards again. And then you've got obviously the problems back into emerging markets. So I think there's still a bit of choppiness to come in my eyes. There's still a few factors we've got to work through. Um, all in all, you can see that market is still quite extended. It's been going up for quite strong for quite a while now. Let's just look at where this overall market is. I might go to the monthly, just see what that monthly shows us. Nothing. All right. Get back over the ASX. So we're still up, what are we up? 89.91 points at the moment. Let's just have a look I just want to see where Asia is at the moment. Probably not going to see those markets. I don't know if they'll show up, but they should do. Hang Seng, is that today? 30th. So I'm not really showing the data. Not really showing the data from today. I don't know if I've got it on my. No. Oh, here we go. Hang Seng futures. Let's go back to the daily, see if that's gapped up as well. So that's okay. They're heading back up again. So I'm expecting Asia's fairly strong today as well. Getting a bit of a run on from the news of the weekend. From was it ceasefire? I like to call it. Now let's go back to. I just want to go over copper. Any questions on anything we just mentioned, guys? It's a good day. I mean, the problem is it would have chopped quite a few people out. There would have been a lot of people chopped out on Friday of the market. The market just in free fall mode, down 90 points on Friday. Unfortunately, it would have squeezed out a lot of people. Selling through the day, things not looking good. just heavy selling. It was just constant selling. Every sort of rally got knocked on the head on Friday. You'll see intraday. Let's just actually have a look. Let's get here and just have a look at that intraday action. So you can see this, it sold down really hard. That first bounce got sold back down again. The market tried to come back again, and then pretty much got sold right into the closed down. So then we've just turned around and retraced it all back up again. And we're sort of holding these highs at the moment. So whether or not we continue on back up, look, it'd be interesting to see what happens into the close. But yeah, some heavy selling on Friday, and then we got some heavy buying on the open today. So there would have been a lot of people, unfortunately squeezed out of that market on this retracement, but it is that level that we've been looking at for a while now. So I guess if you can hold in there, hang in there with some positions, yeah, and then like anything from here on in, be interesting to see how it goes, and if you get some shorter term positions for a Christmas rally, if that all goes well to plan. Now, copper, so we've got here the daily. We'll start off on the weekly chart just to have a look at the actual overall action. So you can see copper pretty much on the weekly anyway. That was since June. It's been sold off since June, but longer than that. It actually been sold down quite heavily since 2011. It was in a constant trend down and started finding a base somewhere around 2016, and we started lifting, but we're breaking up and out of that contraction. Well, that moved down, popped up a bit, but you can see more recently that pop up. We fell over from there. We rolled over off a double top, and we went into pullback mode since about June, and we're on the weekly charts at the moment. But what we're starting to get is really that confirmation of this higher low, whether that leads us to a big push back up again, or whether the market's going to probably bounce a bit. We might still be choppy, but I think longer term, if they can work it out between China and the US, then I think we may have seen this higher low put in place on the weekly, and we might see some interest back into copper, because, like I was saying before, I think LME physical supplies have been slowly on the way down, which is more bullish for copper and potential copper miners. And then you've got potentially, if they're re-rating the US dollar lower, it should be bullish for copper prices as well, in terms of US dollars. So I think if this could start just picking back up and start heading back up towards that 331 level, there's a long way to go, and it could be a good little rally that we may be seeing over the coming weeks, months. And this daily chart just here, you see it's probably a bit more clear on that daily. You can see the market's pressed down, some heavy selling, on the back of that trade war, all that news really got sold back down again to a support zone around 250, 249, and started to lift. And it's been chopping around for the good part of the last few months since mid-September. So through mid-September, October, November, probably to about where we are at the moment, about 2 months or so. It's been just chopping around between that resistance zone where it's been leaning up to it, and that would be every time it hovers up through that resistance zone. It's just because of the physical supplies. Everyone's got their underlying physical supplies are lower, which should be bullish, but it's been capped by the trade talk, all that sort of stuff. But you can see what it's actually doing is holding that higher low. You've got this press down here originally, it got bought up pretty hard, pressed back down again, got held it ever so slightly a higher low, and then we hold another higher low just recently, probably a few days ago, at about that 2.7 zone. And we gapped up today, so gapped straight up and back into that resistance zone about where we are now, 285, 287. Draw that back up. So what I'm really looking for is this: if we can get this to hold, if this high low can hold, and you can start finding some buying support on the back of pretty much a change in tide on the trade war, then we may start to be, people buy the rumor, sell the fact. So buying the rumor, starting to edge back into copper. Copper price starts to lift, and then we'll be looking at some copper stocks potentially. It just depends if they actually start to set up and start to show some signs of lifting. Let's just get over to, I've got a few here, I think. There we go. Technically they're not that flash still. Probably on the weeklies, the ones to look at. I think the charts to look at, not so much the daily just at the moment. What do we got here? This is Sandfire Resources. I'm not sure on the stocks we've got. So we've got Sandfire here, we've got PNR, which is Pantoro. So these just a list I put together quite a while ago. I think there's some big ones in there, some smaller ones. We've got Galaxy, TGS, Oz Minerals, IGOs. There's a few little ones, a few speckies, but a few bigger ones to take a quick look at. But you can see the markets just going from left to right, left of the chart. Actually, let's just get back onto. Yeah, look, it could be in a prime zone here. You can see the monthly, it's in that sort of a prime zone around at 675 on the weekly too. It's had a good corrective phase off the highs of about $10. This is on Sandfire, corrective phase, and that's probably about June. Yeah, June. So it's pretty much the time when um, um, Peter, I think they're pretty much going tandem. So if copper's down, you probably get the same as anything else, I guess. Um, Copper stocks will be down. And you can see here that was about the same time in June. So that was the 12th of June. If we go back to, was that the original sell-off here? No, it was up here, wasn't it? 7th of June. Yeah, okay. So about the same time as this pullback started or began was sort of when copper rolled over from that double top, pretty much just in here. That double top just in here. So we found some selling pressure. They break straight through support. That was all on the tariff news. So that's led that big sell-off here. But I think what I'd be looking for on Sandfire in particular is I think it's pretty clear. You'd be wanting to see, if we're right, if that's going to lift, I think it's on the weekly, maybe just the weekly charts I'll be looking for. It's mainly that 760 zone. If we can start to lift, I'd ideally, because of what we've seen, we had that big, basically push down, this sort of M pattern here, and it did take out the low on Friday. The good thing is it did reject that 540, was it 640? 640 zone, just in here, and it finished back sort of right at 560, I think it was. Where did it close? Sorry, 640. So it closed right at that support zone there, which was this previous low. What I'd ideally like to see is that pop up, and I want to see it. I wouldn't mind seeing it push up through that 750 to 760, push up and then start to maybe pulling back and then start to building. I think all this is going to play into with copper actually starting to show signs of getting through that resistance zone that we just mentioned before. And if we can do that, we can get something off a higher low. I think you'll find the MAs will start to be rolling up as well. Spend a bit of time just building that price action, and that what that's doing is just creating more and more confirmation that the buyers are starting to hold and building that higher low on this from this weekly chart. We'll just have to wait and see how that plays out, but it could be in a prime zone. Whether that's the best one to look at, let's just flick through a few others. We've got PNR. Look, I don't like the fact that it broke through this low, so potentially this is not the best one. That's already had a couple of good days up. This actually doesn't look too bad. So AVB, actually it's not doing anything, is it? Don't worry about that one. Forget about it. Forget about it. Galaxy. Yeah, Galaxy could be one just to put on the radar because it is a popular stock. It's done 5 million today, 6 million bucks today. What I probably would be looking at Galaxy. Let's draw that one up. Let's actually just flick through. I just want to see the others first. Okay, TGS could be one that's Tiger Resources. Forget about that. It must be a takeover between the other one. Oz Oz could be quite good. Just look at through those charts. You'd want to see it lift through 10. If it can get up through 10, 10 is going to take out these little minor highs in here, and then you'd expect it to be tacking up through 1050. And if you're taking a step back, just looking at the clear, it's lifted up to 10 bucks, pulled back. This is the longer term monthly chart. This is back in 2017. Lifted, just ticked off through $10 again, and we've just gone into a pullback again, which on the weekly is this pullback here. And if we're starting to hold and starting to show some good signs, you would expect it to lift back up through 10 and start to get a bit of a run on. I think the next level you'd be looking up through is towards that 17. Initially, you got minor levels along the way at 1250 and so on, but the major one will be up towards that 1750. And that's assuming that copper gets a good run on. But again, only time will tell. And I think between China and the US, it's still going to take some time to play out. But the good thing is, if we get a bit of a string of positive news, I think that could lift copper more, because we're always trying to anticipate what's happening. No one's going to wait for news to buy into copper. There's going to be people going to be start anticipating. If we get enough good news sort of starting to pile up, they start negotiating things, to start looking to go in the right way, rather than they get to a bit of a halt again, or loggerheads again. If it go the right way, we should start to get copper lifting, getting through that resistance zone, maybe looking for pullbacks, buying into some copper stocks that may start to get through some key levels. But it's something I think we should be keeping an eye on at the moment. So what do I want to go over? Galaxy, that little, you can see that clear zone through 285, 290, just through here. If it lifts up through there, then I'd be ideally looking for maybe a first sort of pullback. So I wouldn't mind seeing those MAs come together on the weekly. So I'm more basing these trades, would be basing trades more around the weekly mark. Around the weekly charts than anything else. Galaxy, let's go back to the weekly actually. TGS, forget about that. Oz, IGO, that's Independence Group. What do they do longer term? So that's it's actually quite choppy. We could be in a prime zone on the monthly, potentially on this weekly if we can start to lift, but it doesn't look good just purely at this price action at the moment with that big washout. But you'd have to assume if that's going to hold, that's going to be a washout, and ideally you'd want to work off your higher lows. Similar to here, if we can work it, not so much this high low. Actually, I'll just draw that up. I want to show you what I mean by that. There's two higher lows. You've got basically one here and then one here. The difference in those two is that the first one, if you work off that high low, I mean, that could have failed. If you're just buying in here, well, if I drew that line up, I like to be exact. That resistance zone, we could have broken up through there. That could have failed. It could have gone up a few cents and then failed and roll over from there. You never know. But the difference there, we've got this pop up, and that's your first pullback. And that's, you can see the MAs are starting to tilt up again. You can see that sort of, how would you say, rise, and that 20 starting to rise. It hasn't pushed through the 50 yet. So ideally, you normally just want to sit on top of the MAs like this. That's a prime setup. If you're taking, especially if you drop it down to the daily, you get this lift here. Similar sorts of things just in here, but that didn't play out as strong. And then we started to roll over from there off your lower high just in here. But that higher low is a fair bit different to that higher low just off $3, purely because it's broken out of this contractive phase through here. So that's your contractive phase down. If you buy into this high low, there is that risk. I mean, you got lucky, obviously, but there is that risk that it may not finish contracting and you're buying a bit early, a bit premature, it rolls over again and washes you out. But this, when you get this clear break up and through, I mean, sometimes they keep going. You may just have to, you take those on the chin. But what you're getting, if you can buy into that first pullback, so that's that initial thrust higher when everyone's waiting for that, it does thrust higher. Then your fresh buying that's sitting on the sidelines ready for that first pullback is ready to support it at higher levels. And then you can just drop it down to your, if you can get it down to your daily. I don't know what actually played out there on the daily. Let's just see if we can find what the daily showed. Yeah, this was your first pullback. Yeah, it would have been a bit of a tougher one to trade. You've got a little entry just in here with minimum risk sitting on top of the daily MAs, and then up we go. Does everyone understand just what I was trying to mention on the two differences between your high lows, why you'd be looking for the secondary one, which you got that more of, okay, you're giving up a few points if you're buying, potentially if you're buying somewhere around 380 as opposed to around 340. But there's going to be the times when you're buying it before it breaks out of that contractive phase, because don't forget, we're always trying to buy when the market's going from contraction into expansion. Now, if you bought on that first high low, like we're saying just on here, that hasn't come out of contraction just yet into expansion. But this second one, yeah, we've got the first that's gone popped out. That pullback, we're buying into expansion rather than just anticipating that expansion move out of contraction. That makes sense. Just want to try to classify the two differences in what we're looking for. So that was IGO, I think. Western areas, back to the weekly. I mean, I'm not a big fan of that one just as yet. Pan, I mean, Pan could be a good one. Could be in an ideal phase, but a lot of them you can see they've pulled back, but you're still just looking for that higher low to build. This is a real specky, a small one, Tasman, but you can see that's potentially holding if you look at the daily chart. So this good run up, it's starting to curl back up again. So this one could start to get a bit of a run on and go blasting through 10 cents. It is going to be a bit more of an aggressive trade, but if that plays out, yeah, we could get straight up through 10, potentially 13, and start to looking up towards that 20 cent mark, that whole number. So the ones I just want to look at first is probably, well, mainly is Galaxy. I think there's a good argument for this one, and I've had my eye on it for a while. Just thought it would drop. Where's my chart? Here we go. Oh, there we go. So you can see it's had a pop up, pull back, press higher, come all the way back down to test that support zone, and that was somewhere around 150 or so. This was your ideal entry, you can see. Probably if I take that one step, change colors just so it looks a bit clearer. That for me, prime little entry around here somewhere. And I'm not sure whether we actually did take that 2017. We may or may not have taken that Galaxy. Let me just see. We have traded this in the past, 2016. So, but we did well on it, but it wasn't that entry. We were somewhere in here. We got this little run up. But either way, you can see that was a prime entry again. You've got a lot of little things adding up. You've got your higher low. We've got this double bottom essentially. The trend hasn't broken. It's breaking up out of contraction. So contraction lower, we're starting to hold a higher level. So we've got our higher low in play. We've broken up, ever so slightly out of contraction. We're starting to go into expansion. As soon as you start lifting, you can buy that, stop below the higher low, and away you go. I mean, that's turned out beautifully. May have a clearer setup if we go back down to the daily, but what we saw was that lift. Now what we've got, pretty much the market's popped down and a bit of a base in here, only ever so slightly washed out that high. So that I would say that's more your secondary leg low of what we just seen there. But it's all starting to play into potentially this could be the zone where we're going to be looking for a higher low to play out. Don't know just yet. We just have to keep an eye on it. But ideally, if we can, I think it's pretty much if we go drop it down, it'll be, yep, so there's 280, 290 zone, which is just in here if we can get that pop up. Let me just clear up this chart. Let's not worry about that. So the first thing is we've got maybe early stages. That's your contraction, potentially just breaking up out of contraction. I wouldn't mind seeing a bit of a clear cut. If we get a break up through here, that 290 zone, I wouldn't mind pop up, get your high low, bit of contraction, and then what we're getting is that buying into that expansionary move. Probably not as nice as this one, where we've had a deeper pullback, built a nice little, nice deep higher low in here. If this is your high low, okay, that's just where you have to play out. We may get caught in a bit of a squeeze. It pops up, chase it up, and then get squeezed back out. But we'll just keep an eye on this one because we're potentially buying on the rise. It's just, you can see how your stochastics have gone from oversold pretty much to that overbought zone. So just be careful if you are buying it through 290, for example, now, it does pop through and you buy and stop, pops up through, and then you get this bigger move back down. It cleans you out because it isn't sort of stretched on that weekly charts. But ideally like to see going back down to the daily, you can see if we pop up here, I'd like to see maybe coming back down to retest 240 or 50 and then starting to lift from there. And I think that would have a lot stronger move and it would be more sustainable on the upside. And then what you're doing is when you're getting back in there, you've had that retest, it's been confirmed, you've got buyers stepping in, they can see this major low in here in play, which is here, that major low. That's in play. You've got this double test, double bottom, essentially what we saw here. If we get that playing out again, somewhere around 240 or 50. A little sort of inside, it's a double bottom, along with being a higher low, a lot stronger move, and you would expect a stronger move up, which could take us up through 360 and potentially up to new highs through 440. Who knows? I don't mind that one anyway. Now let's get into any questions on that, guys. Feel free to put in some, if there's anything you want to take a quick look at. The market's sort of hovering up at 91 points now, 90.8, 91.2. They're still looking quite strong. Any questions you may have? Oh, if you've got any questions, just chuck them in the chat. I'll get started on I want to talk about two other things, ORE and KDR, as an example of just being wary of what the weekly charts are saying along with the daily charts. And then, yeah, put in some stocks. We'll get into that in just a second, Gino. Now, we'll start with ORE. So I've seen this as it's a bit choppy. Okay, we're probably from the weekly charts. Actually, do I need to mark that up from there? I just want to take note of the two difference, and this could be what I was saying earlier on. If we get a bit of a Christmas rally, and that 90-day, we might have a 90-day appeasement on any sort of trade talk that's going to keep knocking the market down. And we start to get buyers stepping back into the market, starting to push it higher into Christmas. This could be one. This is ORE, Orocoba Limited. This is the weekly chart. Screen snapshot. Let's just take that there. So you can see the market's it's popped up. We had this pullback, another retest. Normally when you can't get up through a resistance zone, the previous highs, it's going to have a deeper correction. That was quite nice. So I'd really take that rather than being a higher low. I'll sort of say that's the same level because you've got this pop straight back up. So it cleans out that zone, puts a few people, anyone that's bought it probably back on this secondary rise, have been put back on the sidelines because obviously they'd have their stops. Or more likely than not, their stops just below that $3 mark. Cleaned out, come back down, retested that zone, and started to take off from there. So we've got this big leg up, probably about nearly equal to that first leg up before we got this sideways consolidation, next leg up. So really anchors down at about 3, which is this zone 3, which is just that previous low. So the weekly, we've had some weakness. I wouldn't have, if this was going to be strong, I wouldn't really want to see it. I wouldn't have wanted to see it if I was a buyer. This price action pretty much all the way back down to 3, whatever this low was, say somewhere around 320. So essentially it's retesting that $3 mark. It's come all the way back down. You can see this little spike up here. It doesn't mean that we've got through that 475. It doesn't mean we're breaking up out of contraction. On the weekly, I think the weekly could still be choppy. It may just chop around here. And you can see the MAs are just starting to flatten out a bit now. We're sort of hovering around that overbought mark on the weekly. So if you're looking at it from a probability perspective of rallying from here, I wouldn't add too big a probability on this one, just as opposed to something like this when it started to rise off this low and just kept, once you got to about here, we're already breaking through the highs, but it lifted from $4 as it went from overbought, so oversold to overbought, got up through this level. Of course, we hung around there and we rallied right back up to $7. But I wouldn't add, this is a different story, a different sort of price action and cleaner. And it took a fair bit more time to get off that low, to retesting that low, whereas we've just pretty much touched down on this low, got this minor double bottom, but we haven't broken out of contraction just yet. And the market's still being held down. Pop its head up through 5, and we're straight back down again. We've hit 4. And this is, for me, it's not really that inside high low that I'm looking for, as opposed to this one. This is your inside high low off this sort of price action, off this low just in here, a higher low here. I don't really say that's a higher low off this zone, off this double bottom just below 350. I think it's got a fair bit more work to do. I'd like to see a bit more, a few more weeks go by and it just chop around between say 4 and 475 and start to edge higher. You can see that MA start to roll back up again. Everything's starting to look good. And by that time, we're pretty much finished moving down. We may be consolidating sideways. And if we can get some high lows to work off, start to roll up. So that's the way I'm viewing the weekly chart. It's look, it's got the makings of potentially moving up, but I still want to see some price action on that weekly chart um, to be warrant a good trade where I'm pretty much gunning for these highs at 750. Now, if we go just quickly to that daily, the daily for me is showing a slightly different story. It actually doesn't look too bad, if this makes sense. So this is what I'm finding a bit conflicting with the two charts, the price action off the two. You've got this, it looks a bit clearer on that daily chart. You can see we've got that 340, 340 pop down. This is all in your weekly move down, corrective action back up, your secondary move down, back up, and that's just breaking that anchor there. Come back down, we wash out the lows here. So you have your little washout of the previous low, which is here. And then we lift and we took out this as a clear cut level at 480 with this sort of pop up here. So ideally, I mean, if this plays out and it starts to rally back up and gets up through 5, there's no reason why you can't buy on the rise through 5, but your stop would have to be, I'd say, fairly loose at just below $4. And that, to me, off that daily chart is a legitimate buy. And we're starting to rise here. We've got confirmation. We've got our higher low. You know, we've got this sort of washout. Everything sort of from here across is adding up. You know, with contracted price action, you know, the bottom seems to be put in place, especially when we've got this rally up here, up to that sort of $5 mark, out of contraction. We've got that pullback. That's your first pullback. We're holding a higher level, and then we're starting to lift. Ideally, I would like to, rather than get through 5 straight away, I'd rather see it just sort of chop around some inside higher levels, higher lows. And by that, I mean, if this is, let's just clear this up a bit. This is our price action. 1, 2, 1, 2. I would like to see something like this, just some inside higher levels maybe, and then start to break up. That way, two things. If you're wrong and the weekly is the chart we should be looking at, we're not risking too much from our daily entry. We've really reduced our risk on it, and we're sort of preempting that breakthrough 5. I think that's always a good thing, because what you do, rather than buying it on a break of 5 and when you're wrong and it turns around on you straight away, and then you're pretty much in the red from day dot. With this kind of price action, it enables you to buy early, buy more in the unknown, but it's still off your higher lows. It's an inside higher low comparative to that $5 mark, buying on a $5 breakout with wider risk below $4, which is down here. You're minimizing your risk. You're front running a break because you know that there's probably going to be some buyers that are buy on a break through $5 and probably hold their risk just below 4 and see if they can get a lift. And if you are wrong, at least you've got a bit of a buffer to potentially just take it off at a break-even trade. Maybe the overall story's changed between China and the US. They may be coming to some conflicts again. But if it does play out, then it doesn't really matter if it plays out and it goes straight through 5 and you start to lift and this is your next target up to 640, so be it. That'd be great. So you can see the difference, but just between the two charts, the daily I really do like, and the weekly, I think it needs more time. It may to play out. And I think it's just because of this, the last probably, well, I guess, couple of months of price action. I think what we're seeing is KDR, something similar. And these wouldn't be the only ones. There'd be quite a few, companies that are showing a bit of weekly, could be starting to show a good sign where they're in a good zone in the weekly, but they haven't played out. And I'm talking about cleaner price action, less risky price action, high probability setups with a high probability trade. The weeklies can be looking good, but I think a lot of them are in a good zone, but they need to play out and take some time to play out. Whereas you drop down to the daily, they could be setting up straight away. And I'm not a big fan of chasing those ones. And it could be a bit of that FOMO. And don't forget where the US is. I mean, if the US goes into pullback mode, they're stretched, and they have been stretched of last week. A couple of good sessions last week, 600-point rally, or 500-something point rally last week. They may be a bit stretched. They may have to contract a bit, which is going to make us a bit choppy as well. So if you're looking those daily entries, just be, I guess, just remember what you've got, what the weekly story is saying, what the overall global story is saying, and if it does lift, know exactly where your risk is. Don't risk too much, and see it. I mean, there's every opportunity that they do work out and they do play out quite nice. But at the same, on the flip side, if they don't, you're not going to risk too much. So KDR, if we just go to the weekly, you can see I don't think this has played out just yet. I would rather see it contract a bit more up here, and it is hovering around that overbought mark. Nothing to say it can't pop up above 80%. This market just takes off, and then before you know it, we're up at 230. Okay, that's great. But you can see just the way, generally you want to be buying something like this. I mean, that's a prime entry on, this is Kidman Resources. Oh, let me just draw that up. This for me is a prime entry. I really do like this. You've got the contraction like we've just said. We've got the market holding a low. We've lifted. We've got the pullback. This is your higher level. And if you bought, through there somewhere around 60 cents, 65, your risk is just below 50. Ideal. I mean, this is all in hindsight, obviously, but you've got the same structure. You've got this structure, markets higher highs, higher lows, goes back into a bit of a pullback. You've got the lower high in here. So, okay, as soon as you get your lower high, you're thinking defensively. The market contracts back down into a previous low, retests it and starts to lift again. So all that's a good little sign. Then you're looking for your first pullback. We're sitting on top of the MAs. You can see the whole time the MAs really sort of contracted in. They didn't cross, and then they're starting to lift again. At this stage, they're starting to lift again, and you're bought into a rising market. So here, contraction. So here we've got expansion, contraction, and we're going back into expansion again. You want to be buying back into expansion after a nice contractive phase. I always like that sort of price action. It's different to buying when the market's just holding higher levels, on the weekly, and it's just doing this type of thing. And then you're just ideally looking to buy anywhere in here, here, here. You buy into that continuation pattern on the weekly, looking down to your daily for your entry signals. But I think with Kidman, we've had this big run up, and you can see these highs didn't get too far before we just toppled over. Got this little pop up here, pullback, just washed out that 90-cent mark, and we've had a good, strong push up through. You'd have to say that was your anchor level to this trend down. Really, that was the first anchor level around 125. Is this going to be a higher low? Look, it could work out that way. I just don't like the fact that it's crossed down. I don't really expect the MAs to cross down and cross straight back up again, and this to go from being overly bearish to being overly bullish off one little minor higher low. I would ideally like to see, clean all this up. I'd ideally like to see that should pop down, press lower. That should push up. So we'll get something like this with a bit of a washout. We've pressed up. I'd ideally like to see from here, we'll just change colors, the market contract again. Just the same sort of price action. Spend a few days contracting, give us an inside run at this high at $1.60. Again, we're minimizing risk is one thing, and we're taking that preemptive breakout. We're front running the move through $1.60, which is, it's going to just mean that if we're wrong, we might have something up our sleeve. If we're right, it doesn't really matter. If we get this price action to be ideal, I find it a bit harder to trade a break through $1.60 with our risk at $1.15. I mean, I don't know what percentage terms, probably what would that be? Somewhere around a 40% drop. No, I can't trade like that. So I hope that makes sense, just what I'm saying between those two charts. I think I just noticed these KDR and ORE. Always go back to the weekly to see what the bigger picture's saying. And I think, okay, we're on the rise here, but I just want to see a bit more price action play out in the weekly. And that could be suggesting that any sort of move up is going to be capped. We're not going to get a solid move up. It might be on thin volume, which means it could come down pretty fast. So just being careful. But yeah, that daily here is not looking too bad for me. I mean, if you bought it just on that break for $1.35, your risk is $1.20. Front running a move at $1.60, I think that's a bit what we said on the weekly. What we'd like to see on the weekly is sort of playing out on that daily, but we'll see how that goes. All right. Any questions just on those before we just get into, we look at IAG? Is that all making sense, guys? It making a bit of, and I think if you just flick through your daily and your weekly charts, I think you're going to find quite a few that are, I'm not saying this is ideal, but something that's they've pulled back off their highs on the weekly. And generally, if it's a weekly, it's going to take some time to build. You don't really see things just pick up straight away on a weekly chart, which is making it easy to trade on the daily. It generally just doesn't play out that way. Let's just look at. Just want to see what. Oh no, that's all. All right, let's just look at IAG quickly. What happened here? So again, that's been contracting, and you can see that by just the fact it's breaking through an anchor level. So whether or not, look, this could be one too. You can see how, I think this is one worth going over. Not a bad one just to keep an eye on, Gino. So just look at this. I know not too many people go back through the monthly, but you can see it's propped up here, come back down, retested the lows around that $3 mark. That's your first leg up, pretty much got to the highs, pulled back, consolidated at a higher level, which you always want to see, especially when the MAs are up. Sat back on top of the MAs, started to lift again, and that's always good when you see this kind of move, say from $3 to 650. I know this is a monthly, but if you can apply this to a daily chart as well, it's always good. You have that pullback and it starts to show signs of holding again, then you can buy on the break up. You can just whittle it down. If this is a weekly chart, you'd be dropping it down to potentially that daily chart to get the entry set up. And if it's a daily chart, yeah, it doesn't matter. You know what you're going for. And then we got that secondary move up, which, so if you go back to, it's probably not going to show, it's not really showing it on the weekly, but this is one big leg up. That's your big monthly, that's your contraction. It's had a bit of a pullback. We're going back into expansion. So what I'd be looking for here, are we going back into contraction? Do we have to play out? Is there a fair bit of work to do before we start to build again and start to go for that another third major leg higher and take out that 860, these 860 highs? And that's all because of we're maybe, if that's going to play out, I think we're at the early stages of that. Just looking at this weekly chart. So this here, that's your contractive price action, and we've got this big leg up here. So when you break this down, so when you start to get this type of price action, we're looking at the far left. That's your anchor. So at this stage on that green candle, okay, it's just retesting the high. Then we started backing off. Then we've got this little minor higher level just in here. If you can see what I'm talking about, just in here. And then we pressed up. We failed again at those highs. And then a third time round, if you're holding long for quite a while and you're sitting on profits, you watch for a third time, it comes off a higher level, but it just can't get through. And then you get this red candle. Could be news driven, could be anything. You're probably wanting to be exiting or watching for an exit. The fact that just in here, we broke through this anchor, and then what do? We bounced, we performed it, we built a lower high in here, you'd be bailing. And that's why you get those corrective actions. But you can see if you're taking note of the signs, the earlier signs, the anchor levels, the retesting the highs off a higher level, if that was strong just off this higher level, it should have got through, should have gone straight up from there. But instead, we didn't, we failed, we got a couple of red candles. That shouldn't happen, okay, if it was a strong market. So if you were holding long, all these sorts of things are going to play with your head, play with your mind. You don't want to give up gains. You'll probably be looking at that thinking, oh, there's weakness coming to the market. I want out, back on the sidelines and watch it later on. And that's why you get these corrective phases as longer term, shorter term, longer term are booking some gains. Maybe these late buys are taking a loss. All that sort of plays out. Now, if we clear up all that, what we get then from there is that corrective phase. You got 1, 2, secondary move down, pop back up. We've got this push back up through that, out of that correction. No reason to buy just yet. Then you've got, again, a secondary move down before we started lifting. So ideally, this could have been the higher low. If you're buying in here, you could be working off. But you can just see that that similar price action plays out time and time again. You go contraction, you've got a higher low in here. That's a major higher low that, okay, heads up that we're going into expansion again. We're starting to rally. So you can start to put some risk on into this trade, and you're really just looking for your entry. There's a higher low in here. Okay, we've got a little pop up that played out, come back down, retested. Secondary time, once we sort of get through here, we've got a double top. You may just close out that trade, and then you've been squeezed out of the market. Then it starts to lift again. You've got more entries as we sit back on top of the MAs, and that probably goes into that weekly pullback. That monthly pullback. And then from there on in, it just started playing out nicely. It started to accelerate up. You can see um, this move up, started going a bit more vertical. We come back down to the MAs, nice entries in here. You can take and I think you can take with a bit more confidence. And we've just popped up through that previous high, pull back, set on top of the MAs, started to lift again. A bit more confidence in all this price action. So this is going to be choppy, but your best entries, or not your best entries, but your biggest payoffs are going to come in earlier on that trend as it's starting to build, as you're starting to work its way higher, as you're starting to come out of this contractive phase into expansion. There's going to be a whole bunch of traders when you get through the previous highs that is going to start to come on their radar. They might start to buy on a lift through here and then so on. But there's going to be a whole bunch of traders. There's going to be some more aggressive traders in here. Probably, I'm assuming traders that understand price action, understand what's happening a bit clearer. They can get the early entries, but if you can work on getting the earlier entries and read that price action and what's happening on a bigger picture, you can start to refine your entries. And I think that's what, by reading what's happening here, that's the way I'm reading it anyway. Probably been off track a bit there. So yeah, what we'd be looking at now, whether you take this as your anchor or this little minor level here, either way, we've popped up, we've sort of broken through that anchor, and we've gone into a serious, if you take it here, we've gone into that corrective phase down. We could be chopping back up. We may make a major lower high, but either way, I think it's very early stages on the weekly chart that we're in a corrective phase. We're in a corrective phase lower, and we haven't shown any signs just yet off the weekly that we're starting to hold. There's no reason why, you can see us go from overbought, we head up to oversold. This little pop up here starts to lead to a deeper correction. I mean, maybe it's going to happen, maybe it's not going to happen. Maybe we start to, if you can see, let's just draw that back up. This is what I wanted. Change colors here. Maybe we're heading all the way back down. That could coincide with a move to about 620, straight back down again, if we don't get a higher low in here somewhere. So ideally what I'd like to see, I would count this as one move, a pop up here, one move, that's your pop up. I'd like to see something which starts to hold some higher levels. And then what you're going to do is drag in some buys. The longer it sort of consolidates sideways and starts to hold some inside higher levels, I think the better off this chart is going to look. And it's going to it's going to appeal to some buyers, to, different types of buyers that have got lower risk tolerance or higher risk tolerance, the way you want to look at it. Does that make sense there? I think we haven't seen that weekly chart just play out yet. And if you just flick it down to the daily, I mean, some people might have bought it through this level here, but this really could just be that contraction. So this is your weekly leg down, maybe a pop up, your secondary weekly leg down, maybe a pop up. This could just be holding. I'm just going to get back that weekly. Could be the start of this move down from 740, take out these lows at 670. This could be the start of it. And again, you've got this 1, 2. We could just capitulate. You don't know what's going to happen. So ideally, I think on the daily it's a bit too early, but I think that would have sucked in a few buys because you've got your higher levels. But in context of the bigger picture, I think it's still too early. Does that make sense? I think that's very similar to what we just spoke about KDR and ORE, where the weekly has to play out a bit longer, and the early could be suckering in a few of those short-term traders. It may or may not be. It may just play out. It just kicks on up and away we go, and we miss it. But I think there's going to be there's enough shares out there which you can pick something that sticks to your, conforms to your plan, your trading plan, the way you trade, your style of trading, and it's still going to play out and be some handy gains for it. MAs, Gino, I've got a 20 and a 50. I basically stick to. They're not hard and fast, but they're exponential, not your, well, what is it? Not simple moving averages. So you can change that around, whatever you like to say. I just like the 20 and a 50. You could, ideally you can refine that a bit. You could potentially just, have it somewhere at 15 and a 30 or a 40. It doesn't really matter. As long as all that I'm using the MAs for is really just that, you're looking for zones. If the MAs are up, the 20 is above the 50 and they're rising like they are here, you're just looking to find those zones. If you go to a pullback and it starts to lift, it starts to hold the MAs. I'm just looking for that higher low. That's what I'd use them for. And if it's below the MAs, then okay, that's a sign of weakness. It gets back above the MAs, okay, maybe it's starting to show some early strength. But it's always in conjunction to price action and what's happening on the two different time frames, maybe your daily and your weekly. OVH, let's get onto that. Okay. You can see just even on that daily, if we just flick it back to the weekly, I think the daily is heading south. And that hasn't even confirmed that higher low just yet. I think this really is just, okay, I just want to show you one thing. This is not a high low. I wouldn't classify, okay, it's a high low, but in conjunction to what's happening, you anchor to this leg down, nothing's quite finished yet. So you always got to be careful of what you classify as a high low to buy into and what's happening with the actual overall price action. Now, let's just draw it up. So this market's completely got its pants pulled down. You can see, okay, you got this price action that started to lift, couldn't get up there, then come back down, retested that support, lifted back up, fell short of the previous high up here. Okay, we got that sort of two moves down, and then we lifted. Problem is, this time round, it held a high level in here. That was good price action. It lifted. If that was strong for me, maybe pulled back in the zone and then gone again, and away we go. Instead, this price action led to a pullback all the way to sort of test a zone just through here. The problem is, it wasn't content with that sort of pullback, retested it and starting to lift again. We got this sort of pop through. That was a clear sort of a resistance zone. You know that sort of move there and then rejection through that sort of 83 level. It was about 83, yep, 83 just through here. Rejection there is going to sucker in a few buys, potentially looking at this holding, looking for a push up through 90. But the fact that I don't like the way we wash out here. If we washed out here, I would always look for a move up. So you do, I don't mind if it washes out, but I'd like to see that corrective phase or that pullback in two legs, not just bang down. Does that make sense? I'd rather see, a couple of good days up. We had one green candle here. That was it. And all that selling pressure. That's not a strong sign, especially after a good run up through the highs. I think that's more of just cleaning out the highs, and then you're going to have some sellers start to edge into the market because that price action there on this move is not strong at all. This would be a lot better to see. And then if you're looking to buy, okay, then you're just buying off your higher low and away you go. You know that, okay, that's great. That's going to be a nice higher low. This sort of action has cleaned out a few of these buys. It's holding a higher level, potentially around 85 or so, and it starts to lift. Great, buy into it. But instead, we got this price action. So for me, this price action, along with this washout here, or this clean out of the highs, along with what we've seen previously, is not strong. So if we I just want to clean that up. Where am I? Let's get that, just draw that high back up. So what you've got there is starting to capitulate, and then we just fell away pretty much from there. And this leg, all it really did was pretty much push down, sort of bounce off that zone, a couple of green candles, boom, straight through, come back up, retested that, that breakout, which was somewhere around, was it 77, and then pretty much fell away from there. I don't call this green candle as really a pullback, and actually, sorry, I call that more of the anchor than this is the ones I'm talking about. These, you can see this green candle was within the range of the previous day. This green candle pretty much just gapped down and finished up, but it was still heading south. Whereas this green candle, you can see the previous couple of days highs, it took out a couple of days highs. So I would take that as your anchor level to this downtrend. So if we just do that a bit cleaner, so you've got a move down, a pop up, and then all this is part of one big move. So this is your anchor level to the trend down. So what I'm trying to show is that it's got well and truly ahead of itself. So anytime that you do get the market, can completely capitulate, I think it's going to take some time to recover because that selling pressure has pretty much come off and has been quite steady from 90 cents all the way down to about 50 cents. So it's pretty much halved in price without so much of it, some sort of decent correction. So that's roll over when it, you get that sort of move where it drops from 70 down to 50 cents. That was quite a hard move over the period of what, probably a couple of weeks. You're going to get these bargain hunters. You're going to get buying, but this is the opposite of what we said we wanted to see here. That may be starting to lift. That there's not so bad to see. This is in reverse. That sort of edging back up. Maybe we're going to get a lower high here and start to roll over and retest back down to 50. So to me, I would be a bit concerned about buying into OVH. Was it OneView? I would rather see it test down, potentially pop back down, fail to take out the lows and start to hold a higher low. And then if we can get If this action down can be broken into these types of moves, something like this, and we can start to see buyers stepping into a higher level. If we do break through this low at 56, 57, that zone, which is pretty much here, if we do break through there, and then we start to hold up and hold some higher levels, that's a major higher low here, along with some minor higher lows, inside higher lows, which are pretty much going to lead, which you would expect, start to hold the price action that we want to see and need for a lift. Does that make sense? Is that making sense to you, Peter? Yeah, so no, to answer your question, Peter, I reckon, yeah, OVH could be a little bit too soon based around that weekly price action. We've just come back down, retested off 50. I think to buy it on a break up through 65, it's probably a little bit too soon. It could pop up and then bang, we come back down. But from the daily, I think we could get a bit choppy around here. I think we may retest back down to 55, or maybe we go back down to 50. Maybe we go through 50. But even off that weekly, it hasn't shown anything, especially after this capitulation. It hasn't spent enough time consolidating. And by consolidating, we're meaning dragging in more buyers. So, like anything, even if you look at the ASX, the way it bounced, where was it? Back at the start of the year. It probably was at the start of the year. You could probably say this sort of a bounce here. If that's the kind of bounce you get, for me, after that move down, it's a bit hard. You're expecting it to retest down that zone. You're expecting that volatility to come out. You're expecting buyers to get more confidence after a double bottom rather than just one test. I wouldn't be a confident buying here. I think it's more opportunistic than anything else. After one pop down, you've taken out some lows. There's nothing to say that this trending down is broken just yet. But after a secondary test and a clean out of that level and rejecting it and finishing back above that 56.25, for instance, I think what that's going to do is trigger a few more buyers. It's going to perk them back up again and start to see buyers who didn't get involved in this move up, potentially maybe getting the confidence to get involved here. Okay, and that's probably what we're looking at with OVH. Does that make sense? This move down, that's your first reaction back up. If we can just clean this up, we haven't retested back down to 51 at all. That's just been one pop back up, and I don't really see this as a retest at all. I'd rather see this come down. It may test inside level there, even just come down to 54 or so. That for me is enough. And if we start holding that level and lifting, that's what that's doing, is proving to the buyers who are sitting on the sidelines that it may be time to start looking into it, start to support that level. It's finding some support. It's worth throwing your money at, or worth throwing some risk into. All right. Might have to call it a day there, guys. ALU, let's just have a quick look at that. I might call it a day on that one. ALU is a different story. So you can see we're at a clear level at 20 bucks from the weekly. The weekly's on the rise. It hasn't broken down at all. So if you just look at this, it's been rising, little pullback here, pop up, pullback. So this is your high low here. Took out the highs before it pulled back. Didn't get that low either. So again, that's a higher low. That pop up, new higher high, comes back down and sort of tests around that higher level at 20 bucks. Has a good run up to 30. Okay, that was a good run up. And that, again, when it gets ahead of itself like that, you're probably going to get some sort of action, and especially with the way the markets, the global markets were. Maybe, I mean, this could be a completely, it could be valued a lot higher than 30, but the fact that you get that global price action, the global uncertainties, the global concern, and that fear, you're probably going to have deeper corrections than what you expect. But on the flip side of that, it has held up above 20. Okay, so I like the way it's come into 20, rebounded, it's come back in before we got another couple of green candles. So last week was positive. This, we're starting off on the front foot this week as well with this green candle today. So really, if we can get through 24, I think this level, it's been confirmed that $20 level is holding through 24, and I'll be looking for the first pullback. I'd rather see it pop up, spend a couple of days contracting, and I don't mind when it pops up in a couple of days. So 2 or 3 days, bang, 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 up, and it spends a week sort of edging down. Okay, because what that's doing to me is showing strength. The move up is quite hard and fast. It means that buyers are willing to ramming up, they're chasing it up. Then it gets that slow move back down, slow the grind back down to hold a higher low. And then you want to see it if you start to buy it on the rise again, you go off your higher low after a push through 24. Then ideally that would be great. I'll just draw it up what I'm looking for. So I think, and don't forget, we probably haven't quite, this is the only thing that would be a bit concerning. We haven't quite broken. So, okay, if we do get through 24, there's a good chance we've broken up out of this contractive price action. By this contractive price action, we're meaning this type of move. It's come back down. We're held, that line in the stand is at 20 bucks. We're starting to hold that. If we get up here, we push up and then we start to do this grind lower and hold a higher level, then I think this is going to be a good one. And especially if we can work, and that would be pretty much, it'd be quite clear that we're broken up out of this. We're starting to push up out of this contractive phase lower and start to find some buying support. This grind lower, I think all these sorts of signs go into making up your trading plan or the way you're going to attack this share. And if we get this price action, we could easily lead up to a breakthrough 30 and beyond. But we'll see how it goes. All right, I hope that all makes sense, guys. We're probably going to bid over the mark today. But yeah, any questions, feel free to send them through to support at tradesetup.com.au. If there's anything I missed, which I think we got through, we had a couple of stocks. If anything that doesn't make sense, feel free to send through your questions. And what I just remembered is we didn't get through the right-hand side of that chart, did we? Anyway, thanks for joining me, guys. Let's just hope we can hold up here. We're up 95 at the moment, and just see what this market does. If we can get a couple of good days and we get the little Christmas rally we're after. Anyway, thanks for joining me, guys. We'll see you again on Thursday at 12:30. Cheers. Bye.